In this video, we are going to revise impact of lag in monetary policy transmission. Hello friends, welcome to the Tapasya for IAS YouTube channel. Let's begin. Delay in banks adjusting their lending and deposit rates in response to changes in the RBI's policy rates. Key impacts: reduce economic activity, high borrowing costs due to poor transmission, hindered investment and consumption, slowing down GDP growth. Ineffective RBI policy: RBI is forced to control inflation or stimulate the economy or thwarted. Weakened export competitiveness. Ineffective transmission prevents the rupee from depreciation, which would otherwise make export cheaper. Solution for improvement: external benchmarking, shifting from internal benchmarks MCLR base rate to external benchmarks RBI repo rate, T-bill yields. This ensures transparency and faster transmission. Policy reforms: reforming priority sector lending PSO norms and easing statutory liquidity ratio SLR obligations to free up funds for lending. Deregulation: deregulating small saving interest rates to improve banks' deposit base. Economic capital framework ECF of the RBI. Purpose: a framework that determines the RBI's capital reserves and annual surplus. Transfer to the government. Legal basis: Section 47 of the RBI Act 1934 governs this surplus transfer after provisions are made. Bimal Jalan Committee in the year 2018 key recommendations recommended a contingent risk buffer CRB of 5.5 to 6.5% of the RBI's balance sheet to absorb unexpected risk. Surplus transfer: full surplus can be transferred only if the CRB is about the target range. Components: realized equity consists of capital and risk provision, contingency fund, asset development fund. Revaluation balances: unrealized gains from changes in gold, forex and security prices. They are limited use buffers. Global context: RBI's economic capital is among the highest globally, reflecting its strong financial position. Emerging trends in currencies. Cryptocurrencies description: decentralized digital currencies secured by cryptocurrency, cryptography and blockchain features. No central authority, unlike fiat money. Volatile. Example: Bitcoin and Ethereum. Central bank digital currency CBDC. This is the latest currency. Central bank digital currency. Digital form of country's fiat currency issued and regulated by central bank. Features: legal tender, centralized, backed by government. India's context: RBI is a trialing e-rupee as a retail CBDC. Central bank digital currency to enhance digital payment and financial inclusion. Non-fungible tokens NFTs. Descriptions here: unique digital tokens on blockchain representing ownership of a specific asset. Example: art, music. Features: non-interchangeable unique identity. Stable coins. Descriptions: cryptocurrencies whose value is pegged to a stable asset like a fiat currency. Example: USD. Features: low volatility, bridge between traditional and crypto markets. Banking system in India. Key functions: economic driver, mobilized saving and provides credit to fuel economic growth. Government support, finances government expenditure and projects. Public service, facilitate deposits, loan and financial transactions. Reserve Bank of India RBI, established in the year 1935 based on Heldon and Commission. Core functions: monetary authority, manages inflation and credit supply. Credit controller, uses tools like repo rate, CRR and SLR. Regulator, oversees all banks and financial institutions. Forex manager, administers FEMA and stabilizes the rupee. Bankers to government and banks, manage account and act as a lender of a last resort. Key legislation: Banking Regulation Act 1949 provides the legal framework for banking in India, empowering RBI to give to Economic Offender Act 2018 targets economic offender who flee the country. Banking system composition. Schedule bank listed in the second schedule of RBI Act. Commercial banks, PSBs, private banks, foreign banks, RRBs, small finance banks, payment banks, cooperative banks, rural and urban, non-scheduled banks not listed in the second schedule. Lead bank scheme 1969 promote banking and credit in rural areas through a district-wise coordinated approach mechanism. A designated lead bank coordinates the efforts of all banks in a district. Differentiated bank, small finance banks focus on providing financial service to unserved sections of the economy. Payment banks primarily focus on digital payment and small value transactions. Key financial and monetary terms: repo rate at which RBI lends money to banks; reverse repo rate at which banks lend money to RBI; CRR, cash reserve ratio, percentage of deposits bank must keep with RBI; SLR, statutory liquidity ratio, percentage of deposits bank must hold as liquid asset; base rate, MCLR, minimum lending rate set by banks internally; fiat money, government issued currency not backed by physical commodity; hard currency, stable globally accepted currency, example USD, US dollar; hot money, short term capital that moves quickly between countries to earn higher returns. This is the end of lecture. So friends, we will meet in the next video. If you have any doubt, you can ask in comment sections. Subscribe the channel, like the video, and don't forget to press the bell icon so that UPSC focus videos keep reaching you. Thanks for watching. Jai Hind.